following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is helpless. Market-wise, let's take a look at it out here. We had the Dow Industrials up 182, Nasdaq's up 62, S&Ps are up 21, gold contract up $3.50, trading at $1,122 an ounce. Silver up 19 cents at $17.42 an ounce. Copper flat at $2.94 a pound. Light sweet crude down 70 cents, trading out at $59.84 a barrel. Bonds, we have the 10-year up 14 ticks, 127.13. 30-year up 18 ticks at 153.04. And King Dollar down 168 ticks, trading at 93.47. You have the euro up 45 at $1.14, and the yen is flat at 119.20. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Now, if we go over to the world of the S&Ps, this is what we have, folks. If we take a look at the SPY right now, what the SPY is doing is this. The SPY is at its highs. We're at 212.16. We've done 63 million shares. What you're going to see out here is that yesterday we did 94 million. This is the third day in a row. The volume's contracting dramatically. It is going after its highs. What's going to be intriguing here, the high in the SPY is the 212.24. We've hit 212.20. So as we come into this close, I want to show you something here. Okay, so watch how this shakes out. This is going to be wild watching how this whole thing shakes out. Because what we have is this, is that intraday, I'm going to bring up the S&Ps, the E-minis, and show you where we stand right now. So when we take a look at the E-minis on a, there she is, I got to bring this back. Got to bring this back about 4 days. And this is what you have on here. Okay, so let me put it this way, 12 o'clock, make this a little bit better for us. Okay, what we have is this. We're at 216.25 right now. If you get a close under 2112.75, you're going to have a failure on price and volume. What we've done is this. This is, okay, so what we've done is that we've got over the highs inside the future market, and when we got over these highs at 212, it was on dramatically lighter volume. I mean, big time too. Intraday, you're talking about we had done 82,000 contracts at this 2112.75 area. We got over that, and as we went over that, what we did is that we went over that with 22,000. So it's 22,000 versus that 82,000 level. Okay, so what happens here is this. If you stay over it, guess what? Tomorrow we're going after those highs. You close under it, and this would be about as deviant as you can get. You close under it, and that would be saying that even though you're right next to those highs don't have to get tested. So as we come into this next hour into the close, this is going to be pretty wild watching how this whole thing does shake out. Because what we have had is that each and every little downdraft, even in the marketplace, an updraft comes right after it once again. So we'll see where that shakes out. Now that's on your SPYs, on the SPY and on the S&P. We take a look at the NDX 100, the 3Qs. What you have with the 3Qs, they're still really weak. The 3Qs are trading out at 109.56. and the 109.56. We have 15 million shares traded. That 15 million is coming into 44 million, so it's pretty intense. The high inside the Qs are 111.16. Right now, you're at 109.57. The small caps, we go look at the small caps, the IWM. What we have inside the small caps is this. Small caps right now are trading out at 123.70. That also, what the small caps haven't been able to do, the small caps haven't been able to get into its gap. The top of that gap in the small caps is 123.90. Well, 123.63. So we're actually right there. That's what the small caps have done. We'll see what we end up staying there. Gold contract. What do we have with gold? Gold, folks, wide price spread, accelerated volume, all of the above. Huge contract volume in it. Yesterday we did over 200,000 contracts. In fact, we did 242,000 contracts yesterday. Today we're at $1.60. Gold's on an ABC structure on the way up to $12.46. Silver. We take a look at the silver market. What we have with silver. Silver also had wide price spread, accelerated volume. Silver looks like it's not an ABC structure on the way up, but we're trading it at $17.42 right now. That baby wants to run up to this $18.55 level. Bonds. We go take a look at the bond market. We take a look at the TLT. Now, the bond market, folks, is what's rocking the stock market when the baby is going south. And what we have in the bond market is this. The 10-year right now is trading out at a price point of 127.13. We're up 14 ticks, and what it looks like is that we're setting up a monster ABC down. It's pretty intense. You know, we came down with 2.1 million contracts. You're going up right now at 1.3. The A point on this is up at the 129. Your B point is down there at the 126. What that would get set up is that it would get set up that the bond market itself would take the next leg down, and that next leg down would bring you into the lows of March. So that can be pretty intense as to how fast and furious that bond market is getting. King dollar. Let's go take a look at King dollar. Poor King dollar hasn't been able to basically do anything since it did a 1 to 2 ABC structure on the way up. And what we have with King dollar is that King dollar continues to build cause to get to lower price. You know, when we had hit the high that was established in King dollar was March 13th. That high was 100.78. That level, that had run in an extraordinary way. You're talking about running topside from July of 2014 at 80 all the way up to the price point of 100. The way King dollar is set up right now, King dollar wants to come back to 88. This is pretty intense. But that's what does happen after you do large expansions or contractions. As soon as you go over a 1 to 1.618, we did a 1 to 2 ABC structure on the way up, you always get much larger contractions, whether that be in the equity market, the currency market, the commodity market, all of the above. If we take a look at the Dow Industrials, the Dow Industrials right now, they are literally right next to their high, I believe. So the Dow right now is up 192. We're at 18,253, and 288 is the high. Inside the Dow, it's putting strength into the Dow today. The only one Dow stock down is Cisco. Cisco is down 31 cents. Apple's the leader inside the Dow. That's up 289. United Health is second with 259. Microsoft is up $1. Verizon is up 133. You have Goldman up 93, Caterpillar up 30, and Big Mac is up 26. Inside the NDX 100, what's putting the strength inside the NDX 100 is that you have Facebook is leading the charge. That's up $3. Vipul Communications up 18 cents. You get Adobe up 241, and QVC is up 82. Bringing the NDX lower is that you have Micron Tech down 66, Vertex Pharmaceuticals is off 259, Ross Stores is down 193, and Wynn is down 180. Inside the IBB, what do we have happening inside the IBB? Let's take a look at that. This is the Biotech Index. Biotech Index is up $4 today. You're at 354. That also has anemic volume. The Biotech Index having a hard time just getting into its last swing point. Its last swing point had a volume there of 1.1 million. You're at 1 million right now. You're coming into, however, 4.3 million on the way down. So you're talking about some big numbers on the way down. After the close out here, you're going to have a few equities be coming out with numbers. AMAT is going to be a big one. AMAT has been on a downtrend in an extraordinary way, actually. We've gone from a price point of $25.64 down to $19.87. And the way AMAT is trading, it looks like it wants to actually go lower. There's already one gap in AMAT. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are up 186. Nasdaq's up 64. S&Ps are up 22. We're going to right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the this is Dow Industrials right now are up 188. You get the Nasdaq up 64. S&Ps are up 2250. And as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. Don't forget, folks, Andy has an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time, and all the programming at TFNN, folks. 8 o'clock in the morning to 6 in the afternoon. Live programming right on your cell phone, TFNN.mobi. That'll get you the full stream. Excuse me, folks. Audio stream, that is. If you want to get the TV stream plus the audio stream, just go to TFNN.com on the cell. Hit the box on the right-hand side. And what you're going to see there, little box that says devices, mobile devices. You'll get the TV plus the audio delivered to your site. Andy Heck, what's going on?
How you doing, Tom? Long flight last night, back from Fantasyland. Huh?
Fantasyland, I was out. We were working the money show out there, folks, and I got to see Andy and his girlfriend. It was a beautiful thing.
It was fun. It
was great, no doubt.
Really was nice. But was the rest of the show good?
The show was good. It was busy.
Excellent.
There's no doubt. It was busy, man. So
well, you're back, and gold is rallying for you.
Hey, how about that?
Everything's happening, baby. It's all happening.
That's a big move yesterday, man.
The big move yesterday. I mean, I really, to get positive, I really wanted to see it close above the 12 and a quarter level, but we did trade above there. We'll have to wait and see next couple of days what happens. But it was a powerful move, and we shall see. We shall see. A lot of commodities are up today. Take a look at cocoa, baby.
Well, it was wild.
Sweet.
Yeah, and folks, what happened is that there's it's going to be pretty cool. There's a new trader that's going to be doing the show for Thinkorswim, and he's got extensive experience. He was doing it Tuesday. It was his name's Kevin Hicks. And Andy, so when I was there yesterday, and you got to love these Thinkorswim guys. I mean, it's just kind of like what we do. But he was sitting there trading grains, and he was saying to me, man, these grains are really going to go. And, man, I saw wheat today. It blew my mind.
We took off
I
today.
know.
But so not soybeans or corn.
Yeah.
Wheat. And wheat is the one that I've liked the most. I mean, I kind of missed it. I put an order to buy in last night in the Technomental Commodity Report, but it's going to have to come down for it to get filled because I put kind of a cap on it. But yeah, it really took off today.
That was a $1,500 move today, right?
Big move.
Yeah.
Big move. And look, it's because the spring wheat, it's been unseasonably hot. So that's bad for the spring wheat crop, and that's supporting it. I mean, that's the fundamental reason. The technical reason is these things have been, basically stepped on for so long.
Yeah, right.
So, there's upside. I like the cocoa here, and I like the coffee even more. I think that, some of these soft commodities are gearing up. Look, it's very dollar related. All commodities are coming back to some extent. We have to see if the dollar finds some support down here at these lower levels. But if it keeps falling, I think that we could be in for some interesting markets.
Some real action. No, listen, man. The dollar looks to me as looks like we're running to 88, which is going to blow some minds, man. But that
will blow minds. But if it goes to 88, it's a huge buy. Huge buy at 88. I mean, if it can get back down there, we'll see.
Yeah.
We'll see. Gold looks good. Silver, interesting. But silver got to get up to about 1850 to get really interesting. The divergences continue, and they continue to bother me, Tom. $62 discount for platinum under gold. 70 to 1 on the gold-silver ratio. Still big divergences in those markets.
Yeah. So let's talk a little bit about. I want to wrap my head around this silver gold deal again. So walk me through this right now.
Let me put a chart up here so we can take a look at it. And if I can get it on a longer term basis, let's see. While we're talking, all right, I'm going to put up a monthly chart. It'll be up there in a minute.
Okay.
But, look, right now we're at 70 to 1. That means
so 70 ounces of silver to 1 ounce of gold. Right.
Right. It costs 70 ounces of silver to buy 1 ounce of gold.
Yes.
Over the last 40 some on years.
Okay.
The average, and if you go back in history, it's even lower.
No, I know that, but I know that one. But
over the last 40 years or so, the average has been about 55 to 1.
Okay.
55 ounces of silver in each ounce of gold. And every time it's gone below there, like it did in 1979, 1980, it got all the way down there to like 16 to 1. Then even in 2011, we got down to like 35 to 1. Every time we go one way, it reverts to the mean, which is 55 to 1.
Yes.
And now we're the other way. We're the other way. We're at 70 to 1.
Sure, so that's what's bothering you. No, I can see that. Okay.
It's telling me that either silver is too... Look, it wouldn't bother me anymore if silver rallied, Yeah. Something has to give. Silver's either too cheap or gold is too expensive.
And let me ask you this. Do you know offhand that differential, is that differential only like about 30 or 40 cents? It probably is.
No, it's big. If it 50, let's say 12.22 on gold at 55 to 1 is $22.20
on
that's
silver. Big money. So you're talking about a 25% difference. Yeah, okay.
Back to the mean. So that's why it bothers me. You know, this is what kind of has been eating away at me about gold and silver, and it was making me bearish. But hey, as far as I'm concerned, it's still within the range. It's still a 11.75 to 12 1/4 market here. Gold. We broke a little bit above there. Could we go to 12.50? Sure, we can. But you have to today. In these markets, we have to be prepared to take profits when they're on the table. So if someone bought gold down at 11.80 or something, you got to start scale up selling it around 12.25 or so. Here, I think this is a year of trading, not a year of big direction. So we are getting some nice trading moves back and forth.
Well, see, what's interesting, and what Andy's talking about, folks, is that when gold came down, there's two different areas that it kind of get hurt badly. The first area, you couldn't see it in price as much, but what we did today, Andy, we got up to that area. That area is February 13th. That's where there was a small gap away, but there was some juice there. Do you know what I'm saying?
Right. No, absolutely.
The second one we're over. That was real damage. The second one was on March, but that's always,
Yeah. And I have this monthly chart up now. So take a quick look at this, Tom. This is the 55 level here.
Yeah.
If I'm right. You see how, this goes back to 1979. We were down to 15.47. Then in 1991, we got up to almost 100 to 1. But that was when gold was down at 285 or so, and silver was, $3 and change. These were, very, very strange low levels. But here, we're kind of well above this level. So it could be some explosive volatility here. And if this is going to revert to the mean, then it makes every reason in the world to buy silver and sell gold on spread. It's not necessarily a bearish trade. It's kind of a bullish trade if you think it's going there. But there is a bit of protection in there.
Yeah, no, I can see what you're doing there. Yeah,
so that's kind of what the thing, the gold silver ratio is one thing. It's the platinum discount that's killing me.
Yeah.
$60, $62. It's just too much. As well as
this is unusual that it has stayed there that long.
It has. Oh, it has. It's the worst that it's ever traded is a $200 discount. It's been in 2008 this thing was $1,200 above gold.
No, I know. Hey,
it's amazing.
You stay with me for a second?
Absolutely.
Awesome, man. Stay right there. 877-927-6648. We have the Dow right now up 183. Nasdaq's up 65. S&Ps are up 22. Gold is up 280. You got silver up 20 cents. You stay right there, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow Industrials up 176, Nasdaq's up 65, S&Ps are up 21. Some of the high-volume stocks in this low-volume market. You have Facebook up 293, Apple's up 276, Microsoft's up $1. You have Kohl's is getting killed. That's down 9.92. If you want to see a stock that drops out of bed and just goes to the last time with volume, that's what this little baby did. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And don't forget, folks, right after my show ends at 5 p.m. Eastern Standard Time, Andy's on from 5 to 6 every Tuesday and Thursday. How about we talk a little oil here? What do you think of this oil market?
Okay. Well, below 60 today. The EIA came out with a report that said that the shale production is going to drop, but not as much as a lot of people expected. And I think that's why the price is a little softer today. We're still at about 9.4 million barrels a day of U.S. production.
Okay.
But, you know, there are some bullish things going on in oil here, Tom. For example, oil product prices are outperforming crude. Again, we have gasoline up at $205.50 a gallon.
Yeah.
That crack spread's at $26.60. That's up $1.40 today. So oil product gasoline outperforming crude. Also, the heating oil is outperforming crude. So that's a positive sign. Another positive sign is the fact that the contango, the difference between nearby crude and deferred crude, which was up at 25% in March, is now down below 7%.
Really?
And that means the market's tightening up. And term structure is one of the best indicators in commodities of the fundamental supply and demand equation. And it's very interesting that that's tightening up. So we still have a lot of inventories in the U.S. We still have a lot of supplies, but there are some bullish things out there. And I think that oil will continue to be pulled in two directions. And any surprises, big surprises, will come from the geopolitical landscape in the Middle East. And those shocks will be to the upside rather than the downside.
Yeah, no, I can see that. Boy, that term structure changed quite a bit in 2 months, didn't it?
Oh, man, let's go back to last June. You had a $20 backwardation, which was enormous, right? Then that disappeared by October, and crude tanked. Went into contango. The contango went out to like $10, 20%, 25%. Everyone started buying physical crude, storing it, selling forward against it. It was a cash and carry trade. But now that's disappearing. And as that disappears, that's a positive kind of sign. You know, it's still in contango, so there's still a lot of supplies around. If it goes into backwardation, it's a whole nother story.
Wow, amazing, man.
Interesting. You got to keep. It's so much more than that nominal price we see moving up and down on the screen each day.
Yeah. Hey, your Rangers won.
I watched that goal in overtime. Man, that was some series. They were down 3-1. They came all the way back.
Man. Congratulations.
Thank you. And now they're going to play the Lightning.
That's right. Now that's battling each other.
That's the chance to go to the Stanley Cup, right?
Yeah. Yeah.
That's going to be it. We came within one game of it last year. They're a good team this year.
Yeah.
Washington gave them a tough series.
Well, it's going to be wild watching the Lightning and the Rangers, of course, because you know, St. Louis there. I mean, he's an unbelievable
Marty
player.
St. Louis is amazing.
He
actually had a pretty weak playoff.
Yeah.
He had a great season. You know, we have a great goalie too. I mean, he held Washington to 1 goal yesterday. That was, you know, we've won a lot of games by 1 goal, which is in
huge.
hockey. Yeah, it's huge. Your goalie in the playoffs, your goalie is your money player.
Yeah, there's no doubt.
Absolutely. So we'll see. At least I get to watch hockey for a couple more weeks.
Hey, we both do. We'll be battling each other, man.
It's a beautiful. Oh, we'll have to talk. When does the series start? Tomorrow?
It's either tomorrow or tonight. I think it's. Yeah.
They don't get much rest if it's tonight.
It's probably tomorrow.
Starts in New York, I would imagine. Because I think the Rangers had a better record. Rangers, I think, had the best record in hockey during the season. So we'll see. But are you going to go to any of the games?
Oh yeah.
Excellent.
Yeah.
Excellent.
It seems that this dollar move. We'll get back to the dollar again for a second. You know what's interesting is that on the way down, I mean the dollar was going up dramatically for a full year. July was at what? 80?
May. It started in May.
Yeah, it was at 80. Yeah. Goes 80 to 100. Right?
78.93 was the low, and it just ran to 100.7.
You know, so this pullback here is pretty severe, number one. But you can see that no matter what folks can think, the commodities are all about the dollar, right?
They are. Well, particularly, it depends. It's commodity to commodity, because gold hasn't really reacted that much to it. Base metals, copper has.
Well, see, you know what's really cool? What I really liked about the aspect of how gold wouldn't back down under 11.59 even when the dollar's at 100.
Right.
That to me was impressive, man.
That was strong. That was a sign of strength. Yeah. Absolutely. But silver and platinum did back down.
Oh yeah, no doubt.
They backed down dramatically. You know, look, the dollar, a 50% retracement brings the dollar to 90.00 on the June dollar index contract, roughly there, maybe 89 and change. So I kind of agree with you with the 88. I think that that's possible, certainly. The question is, I always am looking these days because Europe is in such a flux. News is coming out soon. We're in May now. June is like drop dead date for Greece. You got the Spanish elections, which are going to really gear up over the summer. And you have this party Podemos that's making some inroads. So I think that, the volatility is going to come from the euro, and the dollar index is heavily weighted towards the euro. I'm not so sure how high the euro can run. I mean, I know things are getting a little bit better in Europe with quantitative easing, but Europe's still a mess.
Yeah, no, there's no doubt about that. I mean, we're at 114. I mean, if this thing makes it over that 115, man, then game is 122.
Right. But that's a lot of in currencies. We're starting to get used to these big currency moves. These are not the norm.
I know, man.
They are not the norm at all. And I think that the Fed did a lot to stop the trajectory of the dollar by pushing interest rate rises further down the road. And I think that was a form of intervention. I mean, whether it was or not, they got the desired result because it wasn't good for U.S. corporates doing business overseas to have this raging dollar. It was really affecting profits. So, they got what they wanted. They want the U.S. economy to continue to chug along and do well.
Well, what's going to be wild is that the mantra for quite a bit of time is that the oil prices have gone down so dramatically that the retail sales were going to go up, but the retail sales are crushed, Right. But, I heard a couple of these other analysts, talking about, well, hey, listen, people are spending money on different things, and I think they're right. I mean, it was intriguing because it's like, oh, does retail sales only matter? I mean, we go and buy pants, shirts, and all that. Well, in this day and age, I suspect that a lot of it is electronics. A lot of it is people do want to go away. A lot of it is different things versus just getting a new pair of pants or a shirt. Maybe everyone has as many as they can have.
Well, you know what? I think also the financial crisis we experienced in 2008 changed a lot of people's minds. You know what happened to the housing market?
That's a fact.
Changed a lot of people's minds in their spending patterns, and unfortunately, Wall Street doesn't kind of take that into effect. That I think the kind of psychology of spending has changed.
I absolutely agree. And it doesn't even matter if you won or lost. I mean, I made money. I didn't lose money then, but I'm still tighter. I mean,
right.
Everyone.
Because when you
see that happen, it's like, hey, man, right around the corner, man, you don't have cash, you're dead meat, man.
That's exactly right. These are boom and bust markets. These are trading markets. We have to be careful because they are trading markets. We can't. I don't see any huge trends developing. As a matter of fact, the trend in the dollar was the huge trend that was broken.
I know.
And so bonds, the only trend that I could see, the bonds going lower, I think that's kind of could have some legs going forward.
Oh, I think it does, yeah.
I
And it just
think
matters,
that's possible.
They slow it down a little. Let's see. So that we get the yield out here in the 10-year right now is at 2.23. So it's in there.
But Tom, if that trend does get going in the bonds, it's going to kill another long-term trend, which is the higher equity prices.
Oh, there's no doubt. I mean, there's no doubt.
And that's coming. There's no question. And even Yellen, she did a good job talking down the dollar. Now she's trying to talk down the stock market. She said that the stock prices are all full value or higher. So maybe she's trying to talk that down too. Maybe it's a verbal intervention from the Fed.
Verbal intervention from the Fed. I like it, man. I like it. Well, listen, we look forward to the show at 5 to 6 tonight. It was awesome seeing you. Look forward to seeing you again. Maybe we'll go to a Lightning Rangers game, man.
That would be wonderful. Hey, listen, get some rest. You must be exhausted.
No, you don't happen. It was so cool, folks. I can sleep on a plane, but literally, Andy, I got on the plane and just fell asleep and woke up in Tampa.
Good.
Oh man,
that's what Vegas does to you when you come for a short period of time.
That was heaven, man. That was heaven.
All right, welcome back.
Okay, brother. Have a great one, man. Have a safe one. Market-wise out here, folks, we at the Dow up 172, Nasdaq's up 63, S&Ps are up 20, and that little magic number, folks, inside the future S&P, we'll see if it's going to come down into that level. It's 2112.75. Right now, as we're coming into the close, we are at 2115.25, and if you close over that 2112.75, It's what we'll go after that high tomorrow. The thus far, it's got plenty of time to basically whack it. It's got plenty of time. 15 minutes is a long time coming into the close. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 174. Nasdaq's up 63. S&Ps are up 21. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get Big Blue. IBM is up $1.51. You get Walmart up 51. Marvell is up 22. Boeing is up 236. Inside the Dow Industrials. Let's go inside the Dow and take a look at the strongest stocks in there. So the strongest stock inside the Dow Industrials today is Microsoft. We pull this baby up. There she is. Okay, Microsoft right now is trading at 48.68. This is look at that. You talk about a little choppy. Okay, so Microsoft started out, the first high was established November 14th. That was 50.04. Microsoft dives down to the price point of 40 bucks. It's coming back up to that level, but you get volume dying on the vine here. Going to be interesting to see how this does shake out. On the weekly basis, what you had is that we had come down. You put this on a weekly so you can see how this is shaking out. When Microsoft had got smoked the week of the 26th of January, that's when we went from 47 to 40 bucks. You came down there with 437 million. We made it back, coming up there with 274. So when you see something like that, bottom line is that you'll get another back down. You want to go see something that is just, every time this happens, folks, if you understand the art of time in the trade, you've seen this many times, but every time you see it, it just blows my mind. If we go over and we take a look at Kohl's, what you're going to see, let's see, so that's KSS. This equity here is down $10 right now. It's not so much that it's down $10. When you take a look at this on the daily basis, what is just amazing, but this is how markets move, is that you'll see the last time that it had any volume on it was going back to the February 4th. So February 4th, the high of that day was $67. The prior day, it gapped higher. The low of the 4th is $64.24. Well, $64.28. It goes forward from $64 February all the way up to 79, so almost 80 bucks. It starts heading down again, and then all of a sudden just drops out of bed. And where's it go? Of course, we know where it's going to go. It's going to go to the last place with volume. Just hits it right on the head. 67 was the high there. 64 was the low. What you have now, however, though, is this. And this is why you always want to wait for these tests to take place. Now you're going to have an equity that's destroyed. The amount of volume that will come down on the weekly is extraordinary. We're talking about 35 million shares already. What that sets up is that we bring this back a little bit further. What you're going to see, if we put this on a monthly, you're going to see this is a classic test of the highs and just missed them. If we bring this back, wait till you see how this thing is set up. It's pretty amazing, actually. So the high that it was going after was the high of 2007. That high was $79.59. We hit $79.30. Isn't that sick? Okay? You get up there, you hit $79.30. Now what you have is you've come off that with volume. When we were testing those higher levels, it was coming into the swing with 79 million versus 143. So on the way up, it didn't have the juice. Almost made the price, but it was half the volume on the way up. Now, what ends up happening? Volume comes out of it in an extraordinary way, and the way Coles is set up right now is that you're at 64. The baby's going to try to get into the 56 area. So it's pretty intense, no doubt. And it's another one of these things that once these things fall apart, even if you're in them, you can't get out of the way. Let's go take a look at CERE for one of the tigers. See what this little baby is. CERE. The heck is this? Okay, they develop market crops to produce renewable biomass feedstocks. The low is $1.44. The high is $6.56. Thousand Oaks, California. Well, Thousand Oaks is a beautiful place, no doubt. So this company here, this is a trip. So check this out. This company takes in all of $400,000 a quarter. This is pretty sick. So this takes in $400,000 a quarter and has a market cap of $6.5 million. No, $12.4 million. That's pretty sick, folks. I see what he's looking at. Okay, so what they're looking at, folks, is this: is that this equity had gone from $6 all the way down to $2. You did have a sign of strength, but let me show you something. When you get a sign of strength, this had a sign of strength on the May 7th. May 7th, it goes from 176 to 369. What that didn't do is take out the swing point. The swing point up there is 449. I wouldn't be buying it. And it is pulling back with lighter volume. This is what ends up happening. When you can't get up and into the swing point, you get this type of volatility, doesn't mean a thing. It's the swing points that talk, walk, and squawk. And when you get an equity, first off, that has got destroyed like this, and then fundamentally, you look at it and it takes in all of a quarter. Well, was it $300,000 a quarter? I'd first let this thing take out a swing point. If it has the volume, then you're talking a different ball game when you're buying the pullback. If we go over to the SPY, the SPY, and take a look at that E-mini, it looks like this baby's going to close over the high. So bottom line is that coming into Friday tomorrow, guess what? The high's a game out here. The SPY right now is at 212.25. And, well, that's it. The 212.24 was the high. So it's basically just tagged this high. So it does have a shot to basically come underneath it. But we'll see. We've been in this consolidation here since the February 12th. February 12th, we've been in this consolidation. So how we attack this baby right now is going to be important. You know, because you're up and over it. That means that the Dow is probably right at it also. If we take a look at the Dow, it's 247 the Dow is at, and it's 288. So the Dow has a bit more to go. NDX 100 just doesn't have the juice behind the move. NDX 100, you're up $1.66 at 109.66. But that is still quite a way away from its high. And of course, when we do come into a Friday, what you can expect out here, we're going to have some high volatility out here tomorrow morning. What we have done in Europe, the DAX went up by 208 points. The DAX, however, basically didn't have any strength in it. You know, the DAX has just come down from this 12,390. The FTSE, let's see what the FTSE has done. That FTSE wasn't bad. FTSE had rejected lower price, had lighter volume. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming right back with some numbers after the close. Dow Industrials are up 191. Nasdaq's up 69. S&Ps are up 22. Gold's up 290 at 1221. Silver's up 21 cents at 1743. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by an unknown. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We have the Dow Industrials up 191, Nasdaq up 56, S&P's up 23, gold contract up $2.40, trading at $1,220 an ounce. What you have with gold, folks, wide price spread, accelerated volume yesterday, followed through today. We're at 1220. You get an ABC structure with a price target of 1246. Silver up 21 cents at $17.43. Silver also had 2 good days, wide price spread, accelerated volume. Silver wants to run up to that 1820 area. Platinum up $10 at $1,159. Light sweet crude down 73 cents at $59.70 a barrel. Bonds, we had the 10-year up 12 ticks, 127.11. 30-year up 12 ticks at 152.30. And King Dollar down 218 ticks at 93.42. The euro is up 53 at 114, and the yen is trading flat at 119.20. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? If we go to the world of the SPY, the S&Ps, folks, what do you have? You're closing at your high. You're at 212.21. The high out there was 212.24. We hit the 212.32. We've done volume of 90 million, which is short volume. We should be banging out about 155 million. That's on the daily. On the weekly, what we're going to have is that thus far in the weekly, we've done 380 million and 380, 480, 580. We're going to be shot about 100 million there, too. That being said and done, I suspect what we are going to have is we're at the highs, and it's going to make a run for the actual high. Meaning of that 212.24. If we go and we take a look at the futures, what you have with the futures right now, the E-mini futures, trading at a price point of 217.50. 217.50, folks, gets you over the most of the highs. We had a spike high on the 27th, which is 219.75. I expect in the night session, more than likely, that's going to get hit. That's your S&Ps. We go to the NDX 100. We take a look at the 3 Qs inside the NDX 100, and what you're going to see there is this. NDX 100 is trading at 109.58. The first high that was established was the 109.42. That was going back on March 2nd. You're over that. This is going to also get up into the 111.16. It's going to try to at least test that area. The small caps. Now, the small caps are your weakest indice. The small caps just can't seem to get out of their way on the way down. The IWM is traded up $1.30 today. We're at 123.79. You did 23 million. Huge contraction of volume once again. It doesn't look to me like the small caps are going to make the high. The small caps are still in a very large ABC structure on the way down. Gold contract. What do we have with gold? What we have with gold is this. Gold took off topside yesterday. You had wide price spread, huge volume. Follow through out here today. Yesterday, what we did is this. We went from a price point of $11.90 to $12.18. You did that with 242,000 contracts. The swing point that you're going into is the swing point that was established on the 6th of April. The high of that swing point is 1224.50. We're right at 1221.60. We've hit 1227. We hit that swing, though, which is cool if you're a bull in the gold market. We hit that swing today with 1.6 million contracts and, no, I'm sorry, 162,000 contracts, 1.6 million. That'd be a trip. That swing point only has 100,000 contracts. So we have an ABC structure on the way up. Your first price projection out here is at the 1249. If we take a look at the GLD, now this is pretty amazing when you take a look at the GLD because complex ABCs, you know, you see them. This one here was just amazing, though. So the GLD did the first ABC structure on the way up. It had taken the B point out on April 1st. You know, we went over the B point. The B point on the GLD, which GLD trades at 10% of the price of gold, that B point was 115.84. It takes it out on the 1st, takes it out with volume, and then fails, comes back underneath it, which made it a complex one. And then what does it do again? It takes it out again with volume. It does that on April 27th, and then on April 29th, no, it's April 27th and 28th, then fails again, pulls back. Each and every time it's pulled back, it wasn't light of volume. Then what does it do? Then it really blows it away out here yesterday. So your correlations, watch the correlation. First time that we were up and over it on the 1st, we had volume out here of 7.2. Second time, it takes it out again, 7.4. Yesterday, it takes it out 11.7. That's the type of move that you like to see, folks. So what does that mean? Well, on a shorter term basis, it means that the GLD wants to go up and fill the gap from 120.61, which was the gap away down on the 5th of February. The larger portion is that we're going for these highs. The highs that we're talking about is 125, the high that was established in January. That's in the GLD. We take a look at the actual gold contract, and what you're going to see, that high that was established out there is 1309, which is a big move. So it's going to be wild watching this whole gold market. Number one, make the run. Number two, like, why did it make the run? And we're going to go right back to the dollar index because the correlation is pretty direct. The dollar index, folks, has done two separate deals. The first one, which you really want to wrap your head around, is the much larger move. What the dollar index had done is this. It went nonstop. When we take a look at this dollar index and we put this back on a much longer term basis, what you're going to see is that this is a nonstop move that started approximately a year ago. It started in July of 2014. The dollar index at that point was 79.70. It did a 1 to 2 ABC structure on the way up. Parabolic. It goes up to 100.38. At that level, gave it up. Now, it gave it up, folks, in spades on the way down. So I expect what you're going to see here, this is really what's wild. We're at 93.40 right now. This thing wants to run to 88. That's a large move because particularly we've gone down, and it's only taken us 5 weeks to come off this 100 once we tested it again. I suspect it's going to be the same type of move, a very fast move. Because what we had out here in the dollar index today is this. It was subtle. It wasn't a huge amount of volume, but it was big volume. We did 53,000 contracts. When you get a subtle move lower with 53,000 contracts and you happen to be coming into you're coming into 180,000 contracts, you're coming into some good juice because it went up with good juice. That is saying that the market can't hold price. You can't hold price, it's a problem. So we'll see where this whole thing does shake out, but it looks to me like the dollar not only did a large reversal, that large reversal is going to be going down for quite a while. And what it's going to be about? It's going to be about the bond market. What's really wild here is that the bond market, 32-year bull market, it's over. If we take a look at the TLT, they've taken this thing apart. TLT, the high out there was 138. We're at 119 right now. Whether you take a look at the daily, we take a look at a weekly, you're coming down and you're thundering down with monster volume. And this is all going to be about, there's not enough room to get out of the bond market for the amount of folks that want to get out of it simultaneously. The TLT right now, let's see, 138 to 122, that's 16. That gives you 6. So the TLT is on its way to 106 right now. 106, that's pretty intense. 106 is going to bring you right back to, let's see. 106 brings you back to February of 2014. So there's a lot of disconnects out here, but it's going to not only get down there, I suspect we're going to get down there a lot quicker than most folks think. This is Tom O'Brien. This is TFNN. Dow Industrials finished up 191. NASDAQ up 69. S&P's up 23. Stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Let's go to the world of applied materials. This equity has not only down off its highs, just can't seem to get out of its way. AMAT just come out with numbers, and what you have is AMAT beat by 1 penny. It closed at $19.86. It's trading right now at $20.25, which doesn't help it whatsoever. What's important inside AMAT's numbers, folks, is this. So Applied Material, which last month scrapped its bid for rival Tokyo Electron, forecast fiscal third quarter sales that may beat analyst estimates, helping bolster confidence that may standalone company. Revenue in the 3 quarters in July will rise 2 to 6% from the previous period. Demand from computer memory chip makers is helping drive orders for Applied Materials products. But yeah, this is the kicker. Inside of this, and I remember this for so long ago, at AMAT, folks, everything has to do with what their backlog is. When things are going well, their backlog goes up dramatically. Their backlog is flat. Okay, so with a flat backlog, that is no orders coming forward, and what that spells, bottom line, is what? It spells flat stock or lower stock. That's how this thing is set up at this particular point. Nostrum, let's take a look at Nostrum. They topped estimates. Nostrum, this will be interesting too. They see fiscal 2016 come in at 365 to 380. The estimate was 379. And let's see where this baby is right now. Okay, so the top line revenue was $3.2 billion. Estimate was 3.17. Oh, earnings per share though, the estimate was 71 cents. They come in at 66. So bottom line is that thing is not going anywhere. Translate. Whoops, wrong one. Some of these numbers out here as we go through them. The thing that's really intriguing, there's no doubt, is that everyone kind of most analysts had thought that because of the fact that gas was going so low, that everyone was going to be buying retail. Bottom line is that isn't what's going on when you take a look at some of these numbers. The numbers just SYMC. The numbers just are not coming in. And as I said to Andy Hecht last hour, what that can absolutely mean, though, is that, yeah, we may have more money, we're just spending it on something other than clothes. Symantec closed at $25.90. That is trading at right now at $25.20. And this is what Symantec is saying. Symantec issued profit and revenue forecast short of analysts' expectations as a security software maker seeks to develop more modern anti-hacking technologies. Fiscal first quarter profit, excluding some items, will be 41 to 44 cents a share on 1.5 to 1.54 billion. Symantec closed out here at $25.90. That is trading right now at $25.20. And that, we pull this back, we put this on a weekly for a second. It's not a bad looking chart, actually. On a weekly, that still wants to try to get up into that high out there of 26.60. We'll see whether it can make it, but that's the way that thing is set up at this particular point. The El Pollo Loco, that's the new food chain out here that just went public. Their revenue is $90.4 million. That was the estimate. Let's see. No, I got it. Sorry. The estimate was $88.5 million. They came in with $90.4 million. Their franchises were up 6.2%. The estimate was 5.7. They seem to have a little juice underneath them. Now, let's go over first. We'll take a look at the energy market. Then we're going to go from the energy market into the financials. If we take a look at the XLE first, XLE out here, bottom line, looks like it got to the top of its consolidation, couldn't handle the top of the consolidation. This is a nice consolidation. The bottom of this consolidation is 71, where the top is up there at 83. Couldn't handle it. It's going to make a run into lower price. I expect the XLE wants to run down into the 77 area. You can see it's pretty clear on the way up. Last time we had any juice on the way up was 77.95. That was March 18th. That was actually how it came off the bottom on March 18th. So I suspect that's going to run back downtown. The XLF, what we're going to have with the XLF, and this is just how deviant markets are, which is a trip. So the XLF, folks, that runs up today to 24.81. Now, it has light volume. It's going to try to test the highs. The highs in the XLF is 25.14. We're 24.81 right now. We'll see how the test comes in. The deviant deal about this, which is pretty wild, whether it's the Journal this morning, the New York Times, I'm sure the story was in a lot of different newspapers this morning, is that these banks, are going to be pleading guilty to a felony. And that's going to be the first time that the banks have been pleading guilty to a felony. Most times, no, all the time, what we've had with the billions and billions of fines against the banks is that it's been one of these deals that you plead NOLO, you still pay us $18 billion, $20 billion, whatever that is, and we'll move on. What is going to happen in this bid rigging, foreign currency bid rigging, is that they actually are going to have one of their subsidiaries plead guilty. And what the article about is in the Journal out here today. And it isn't, the Journal tries to defend them most of the time anyway, but it's a decent article because they start the article out saying, guess what? If you and I pled guilty to something, you're going to go to jail. You're going to do this. You're going to do that. Inside the Journal, inside this article, they're saying, well, guess what? These banks are going to plead guilty to a felony, and nothing's going to happen. Zero. Bottom line, The corruption is so built in, it's just like over the top, folks. That's the real bottom line. Anyway, we'll go from the XLF, go into the IBB. Now, the IBB, this dictates where the NASDAQ composite wants to go. The IBB is the NASDAQ Biotech iShares. It's trading at 355.59. This has saved itself many times. Okay, the first time when we come off the high that was generated was March 20th. You made that high with 3 million shares, 3.3 to be exact. You came off that high with 4.8. You made a bottom with 5.2. So the first bottom that was made out there was 333. IBB goes all the way back to 368. It gets up there as it got up there the April 23rd. You talk about short volume. We got up there on 1.2 million versus your downdraft of 3.3. We come back down again with 4.3. We established a bottom at 3.5. Now what is it doing? It's making a run once again. So what does that mean? Well, where we are, the IBB is showing that it's getting weaker and weaker and weaker each and every time it tries to make a new high. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And don't forget, our man, Mr. Steve Rhodes, going to be doing an outstanding webinar tonight. It's not too late to get into it. Check it out on the front page of TFNN.com. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow finish up 191, Nasdaq up 69, S&P's up 22, and the S&P did finish at the high, folks. Okay, so that little baby's going to go after those highs tomorrow. Now, it didn't have the juice on the dailies as well as the weeklies, but bottom line, price is up there, and it will go after it. Tonight, our man, Mr. Andy Hecht, of course, has a show on after me. That's 5 to 6 Eastern Standard Time. Get it right on your cell phone at TFNN. And our man, Mr. Steve Rhodes, folks, is going to be doing an outstanding workshop. It's the second part of a 2-part workshop. That workshop is on the psychology of trading, human pattern recognition with our man, Mr. Steve Rhodes. Now, you can still get in this workshop. The way you do it, you come over to our website at TFNN. You can register. You will get the first and the second one. This one will be live. If you can't make it live, It will be on your page for a full 30 days. So check it out on the front page of TFNN. I'm sure it's going to be an outstanding workshop that's coming up. Now, let's go over, we're going to go over into, first we're going to go into the XAU. So when we take a look at the XAU, HUI, whole gold market in general, I'll walk you through this where I think we are at this particular point. So the XAU, folks, is trading at a price point right now. Let me bring this one over here. I'm going to put this up here for a second. Okay. So the XAU is trading at $75.36. When we take a look at this on a longer-term basis, we put the volume underneath it. What you're going to see is this, is that we've been in a consolidation, and this consolidation that we've been in is pretty intense because you're talking about October of 2014. That's a long time, okay? That being said, we put this, and it takes a long period of time, first off, when you have come off the highs, and the highs that you come off had done more than a 1 to 1.618 ABC structure on the way up. And that's what gold had done, folks, just like the dollar index had done. When gold made its high in 2010, 2011, that's what that was. It was more than a 1 to 1.61 ABC structure on the way up. So then what do? Okay, we've been going down in gold from 2010. It's 2015 now. He had bounced a long way, but that's what they've done. Now, what we also did is this. We got under and into the lows of 2008. As we did that, when that thing broke down, it broke down with some volume. Okay, the low of 2008 was 693 million in the XAU. We got into that with 661 million. We tested again with 656 million. But here's the kicker. This is the first time that gold had an expansion on the way up. And this is subtle, but this is what we did. In the month of, when we went topside, the month of December of 2014, we surged forward with dynamite volume. We almost had 1 billion shares on a monthly. We did 997. That's what you needed. That's the first part. The second part's more important. When you surge forward, what you're always looking for is you're looking to come all the way back down, test it on lighter volume, and then surge again. Well, guess what? Watch this, because this is where patience comes in, but as you walk through this, because we're in a really cool place right now in the gold market. So we surge forward 997 million on the monthly. You go higher with 757. These are all monthlies. And then what do? We back down with 724 million versus 997. Now, you love to see that. I love to see that. Why? Because you've had the wide price spread, accelerated volume on the monthly. You've backed down on the monthly, 200 million lighter shares. Okay, now what do we have? Well, first off, what you have is that you rejected the lows of 2008, which is 63. You're at 75. Now what it's doing is this. It's building cause to get into 82. The 82 number is going to be a big number. 79 actually is the big number. 79 to 80. Once you get into that level, guess what? You not only have game on, but then the game would be on up to the 106. And because of the way that we came down, when we came down, folks, the way that we came down from September of 2012 into July of 2013 was a straight line move. You build some cause there, that can get up into the 1,400, 140 area, double the price of the XAU is right now pretty quickly. If we go take a look at the HUI, the Gold Bugs Index, we pull the Gold Bugs Index up. We'll put this back. I'll do the same setup in this Gold Bugs Index. What you're going to see is this. We put this on a monthly, and on a monthly basis inside the Gold Bugs Index, what we had is this. The low of 2008 was 150.27. We hit that low. First time down was 528 million shares. We came down and hit that low, and this is where this really gets cool inside the XAU, because the XAU got to 146, and that had 463 million versus 528. So what did that show? That showed that the HUI, which is the Gold Bugs Index, got below the 2008 low, had lighter volume, rejected it, and then what did that also do? That also went topside with juice. We went topside with 675 million. Then we backed down. We backed down with 450. Both of those setups are saying it wants higher price. Now, let's go right to the present day, where we are present day. There's many people that love using moving averages. There's no doubt about it. If we take a look at where we are right now inside the HUI, what you're going to see is this. We're at 182.29. And what you have with 182.29 is this. We have been under the 200-day moving average since September of 2014. We made a run for it and stayed above it for 1 day in January. We're going to make that run right now. The 200-day moving average, folks, is basically about 6 points higher than where we are. The 50-day moving average, we took that baby out, and when you take an average out in general, I always like to see wide price spread accelerated volume, and we got that. That was just taken out by basically 7 days ago. So you got over that level. The 200 is going to be the next one we're going after. If we take a look at the XAU. So watch what ends up happening at the 200-day, by the way, also. At the 200-day, what you will get is that you'll get plenty of folks that are taking a shot saying, no, gold's not going to go any further. We're going to sell it at that level. If you take a look at the XAU, XAU has been under the 200 moving average since September of 2014 also. That is just approaching it also. And the XAU, and you remember something, the XAU is stronger because what did the XAU do? The XAU had gone under the 2008 lows, had lighter volume, rejected it, came off that level with wide price spread accelerated volume, and the HUI is right at it. We're talking about $77.36. I suspect that's going to also go right after it. If we bring that back and look inside the 50-day moving average, that had taken that out also 7 days ago and took that out with a vengeance, by the way. So it's going to be intriguing watching the XAU, the HUI, the metals in general as they go after that level. Now, what do we want to do? Well, the correlation is so direct with the U.S. dollar. If we take a look at the dollar, what you're going to see is this. The dollar right now is trading out at a price point of 93.40. Well, the 200-day moving average, breaking that, it gets you down to 90.96. I expect not only that you're going to break it, what you're going to see is that more than likely it's going to break it with a vengeance. It broke its 50-day moving average, and when we bring this back, let me put it this way. I'll put this on a continuous contract so you can see these correlations, because the correlation is about as direct as you can get, because a lot of the actual commodities are moving right now. I'll put this on a 1 year so you can see this correlation. First, we'll put it as it broke down on the 50. So check this out, folks. When the dollar broke on the 50, it's just the other side of it. The dollar had been on the right side of the 50-day moving average since July of 2014. It broke it, and it broke it on April 24th. If we take a look at the 200-day moving average, that is at the 90.63. You break that 200-day moving average and watch out below. I suspect that's what we're going to have. Why? Because what we have had is this, is that the dollar did the 2-to-1 ABC structure on the way up, came off with volume, can't hold price, and it's not just the metals market that's moving out here. You have other commodities that are starting to move. UGAZ, we got Mark in Massachusetts wants to look at the velocity shares, 3 times long natural gas. This closed up 21 cents today. Had price behind the move. We're at $2.99. This wants to run up to the, it's going to be interesting watching this shake out, 413 to 542 area. That's the way this is set up right now. If we do look at natural gas is just finishing up an ABC structure on the way up. It was up pretty good today. We are at 306, and you had juice behind this move out here today. Yeah, big juice behind the move. The natural gas wants to run up to this 326 area. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And what we're going to do now is this. Okay, so we bisected and dissected that gold market, folks. We're going to go over and we're going to take a look at the silver market. We're going to do the silver market. We're going to take the silver market first. I'm going to bring up Silver Wheaton. So Silver Wheaton, folks, happens to be the largest silver dealer, meaning just it's a brokerage that buys and sells silver production from the mine. So it's a wholesale type of deal. The low is 16, the high is 27. This is a company that does some numbers. When we're talking numbers, it's going to basically take in about 600 to 700 million this year. It does that with only 30 employees. Now, what we have with Silver Wheaton is this. When the market had gapped down, there's two separate places inside the gold market that we had gaps. We had one on February 2nd. The largest one, however, is the March 2nd gap down. That's what many of these equities are trying to get up and over. Now, the XAU, the HUI did it. The XAU is still working to do it. As we take a look at the silver market, you're going to see that we got into that gap, and we got into that gap today. We got into that gap yesterday. Well, guess what? Both times, we did it with really nice juice. If we take a look at it, what we had is this. Yesterday, you came into the gap with 4.8 million. It couldn't hold price. The top of that price was $21. Today, you did 3.8 million. Couldn't hold price again. That's not bearish. That's just the way it is. What we have is that it's going to take more cause to get up into it, to get rid of that supply line. That supply line is pretty intense. There's a lot of people that are trapped at much higher prices inside all the metal markets. When we take a look at this SLW, what you're going to see, and this is where it's a shame when people just stay in markets, but what you're going to see, the supply line is intense. The supply line goes back, let's see, a couple years, easy. Yeah, it's vicious. I mean, the supply, I can make the case that the supply line goes all the way back to 2012, even before that. So you can see the intensity of that supply line. That would be the bearish case. The bullish case is that you're pushing into this level, and you're pushing in to that level with extraordinary volume on the daily, on the weekly. The weekly thus far, 2 weeks ago, we pushed into this with 26 million shares. Last week with 17 million shares. This week, it's going to be about 17 million shares. Now, it is going to need more, but the way that is set up is that it looks like it wants higher price. When we take a look at this aspect as to how this baby pulled down on a much longer-term basis, it has already rejected lower price, had a lot lighter volume. We'll see basically whether it can get the traction going topside. It's going to be really important that this baby gets up and over, because that'll give you an indication that silver's going to go also. Now, I'm going to go to Pan American Silver. Pan American Silver, folks, this is a dynamite stock to trade, by the way. I don't own it right now, okay? And don't buy it just yet. But this thing is set up to also go higher. Now, here's where the divergence comes in. It looks to me, first, that we're going to get a little pullback on Pan American Silver. Why? Because what we did out here today is this. Yesterday, you had that big sign of strength. And what Pan American Silver showed was this. It got over its swing points with volume. That's huge, okay? Yesterday, we did a volume of 3.1 million. You got to a price point of 10.18. Today, we got to 10.44. Volume dropped off a bit. You're going into 3 million, and we've done 2.2 million, and yesterday was 3.1. So you can see today was light. The prior day was great. The weekly, however, right? This baby is coming in with the weekly, and it's going to have heavier volume. That's what you like to see when you're getting rid of a supply line. It's crucial that you see that when you get rid of the supply line. Why? There has to be more buyers than sellers on a continual basis in order to get up into and over that supply line. And if we take Pan American Silver and you bring this on a much larger basis, what you're going to see is this. you're going to see that you came into your 2008 level. You did it with much lighter volume. The 2008 level at 910 had 56 million shares. We tested that first. Let's see. That price point is 910, 978. We got to 875. Oh, this is interesting. We got to 875 with 55 million versus 56 million. That's pretty intense, man. Then what do? Just as the XAU, the HUI did, you took off top side. You got 72 million on the way up. You come back and tested that area with 44 million, and now you're basically inside a larger range. Now, the larger range we're inside is saying that it only wants to go to 1575. But, of course, 1575 from 1018 is a very large number percentage-wise. You know, so this metal market wants to get to higher price. The watch this. If we go over and look at SCCO, this is Southern Copper. Southern Copper is one of the first ones that came off its low. Now, this is the largest copper market, copper miner there is out here. This little baby came off its highs, come off its lows rather, with a vengeance. You know, we've just gone from $24 down up to $33. And you've done that with volume behind the move. So what I expect you're going to see out here is that SCCO is going to try to make the run over this $34. You make that $34, you're going to see SCCO up to the $48 level. And what all of that does, folks, is this. What all of that does is it's building cause for higher price, and it has to do with the U.S. dollar. You know, this dollar move is pretty incredible. You know, it was incredible on the way up. It's going to be incredible on the way down. There's still folks that think that what is interesting is that I can't quite figure out is like, why is the dollar getting weaker against the euro and all of this? I don't know, but it really, you know, at this point, it doesn't matter. What does matter, and on a technical basis, and this has been consistent throughout the years, for some reason, if that expansion or the contraction is more than a 1 to 1.618 on the way up or the way down, it doesn't matter what type of vehicle you're trading, whether it's a dollar, whether it's equities, whether it's futures, it's an immediate change of trend. And it's like a blow up. That's how it goes. Two different things end up happening when that happens. It's always very quick, meaning within a couple weeks, and the dollar index was all of 5 days. When it happens, normally you come off with high volume, which we did. When it happens, it's a total change of trend. That's where we stand right now. You stay right there. Our man, Mr. Andy Heck's going to be coming up next. And, of course, don't forget our man, Mr. Steve Rhodes, is going to be doing a great workshop for you, 6:30 to 7:15. You can check it out right in the front page of TFNN. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night. Safe night.